Hello everyone, this is Dr. Arvind Nandakishore. Welcome to another fine video by Finance with AB. In this video, we are going to discuss the brand new IPO, that is Dev Accelerator Limited IPO. In fact, this is one of the three IPOs that is coming up in a short span of time between September 10th to 12th. So without further delay, let's get right into the details of the IPO. The name of the IPO is Dev Accelerator Limited IPO. Let's see what is their business. So founded in 2017 Ahmedabad, this is a relatively a new company. And what is its business model and what do they do? They provide flexible office space solutions, co-working spaces, managed offices, and customizable suites. So for businesses requiring offices, they design offices according to particular needs. From creation and management of workspaces to property upkeep. So what is property upkeep? Plumbing, HVAC, that is heating, ventilation and air conditioning, plumbing and electrical works, administrative assistance, and all those things. They are not just giving office space, but they are also maintaining and managing it pretty well with their services. Now they have presence across 28 centers across 11 cities in India, including Delhi, Mumbai, Pune, Hyderabad, etc. They also have 250 plus corporate clients, MNCs, multinational companies, and SMEs, small to medium enterprises. Most of their works are being done by the subsidiary Needle and Thread Designs LLP, who offer office design and execution services. Their strong client portfolio, they are trusted by top brands like American Express, Thomson Reuters, DCB Bank, ShareChat, and so on. So their recurring revenues come from large MNCs, multinational corporates, and SMEs, which ensure steady occupancy as well as cash flow. As for brand positioning, they are among the premium workspace providers in Tier 1 and Tier 2 cities, as mentioned earlier, including in Delhi, Mumbai, Pune, so on and so forth. I think including Vadodara as well as Ahmedabad. Then their growth potential. Their client base helps in faster expansion, including domestic and international spaces. They have also signed LOIs for 3 new centers. What is LOI? LOI is letter of intent. Essentially saying, okay, we are ready to do this. So give us the property so that we can do the office space. We can manage the office space for you. So that is letter of intent with 3 new centers, including Sydney in Australia, and a new center is leased in Surat. Their upcoming expansion will additionally add 11,500 seats across almost 9 lakh square feet of space. Now, some of their clients are Persistent, the IT giant, Wipfly, Deakin University, Zomato, Codal, Horizontal, IEX, Indian Energy Exchange, QX, and so on and so forth. Many of the names which are very familiar to us. Moving on to the top line as well as the bottom line. Their top line or the revenue has seen a steady increase over the past 3 financial years. In fact, the top line has more than doubled over the past 3 financial years, and the bottom line has turned profitable. The company has turned profitable only in FY24, which was a loss-making company in FY23, but in FY25 they have bettered their profit margins. Moving on to the revenue comparison, these companies are not compared to an apple-to-apple basis, but some of them are, including Smart Work co-working spaces and IndiCube spaces as well. So the revenue stands at 179 crore, which is less than most of the other peers for comparison, but the company making profits over the past 2 financial years and improving their profit margin is one to be considered. Moving on, what are the objectives of the issue? So among the 143 crore IPO, 73 crore is being used for capital expenditure, 35 crore for general corporate purposes, another around 35 crore for repayment of already existing loans and borrowings. Some of the key matrices of the IPO. The market cap stands at 550 crore, return on capital employed is around 26, return on net worth is 3.24, the debt to equity ratio is at 2.4, the price to book value at almost at 8, and PE ratio pre-IPO is around 233. The strengths and weaknesses of the company. So the strong revenue growth, almost 62% year on year in FY25, we saw in the top line. Turnaround from profitability, turnaround from loss to profitability from FY23 to 24 and 25. Its presence across 11 cities, so which is a pan-Indian presence. It also has reputed clients including American Express, ShareChat, etc. Now, long-term commitments, lease commitments ensure stable revenue. So the company offers office space solutions in lease for around 3.5 to 5 years or more, which ensures that for all those years, the owners of the building are supposed to pay the lease amount to Dev Accelerator Limited as lease amount. Now, some of the weaknesses are high debt to equity ratio at around 2.4. Return on equity is around only 3.2% over the past years. The PE ratio is extensively high, almost at 213. Probably after the IPO issue, it could even go to 315. So the issue now is kind of aggressively priced. The profitability, yes, the company is profitable, but it is still low in absolute numbers despite the revenue growth in the financial years. The key dates: IPO opens on 10th of September and closes on the 12th. The lot size is around 235 shares at a cutoff price of ₹61. The issue size is at 143 crore and the listing date is 17th of September. This issue seems slightly aggressively priced, if not very aggressively priced. So I might be staying away from this IPO as well, just like I do for Sringar House of Mangalsutra IPO. So please let us know in the comment section if you are willing to take up this IPO and apply for it. Please follow us in all of our social media handles. Till we meet again in another video, take care, Jai Hind and goodbye.